Hey, what's up, YouTube? Welcome back, traders. It's your boy, the Forex Bully, Safe Trader Forex. And you know what? Today, I'm not even going to do an introduction. Today, I'm just get straight to the point. I just want to discuss this current trade setup that I have right here. I'm currently short of the Aussie USD. Ideally, I would have got in back here, right here, and I would have had my stop loss up here, which is about, what, I think 65 pips. However, I caught this trade a bit late. I got in on this trade later today, which was probably around, I believe, what, maybe 3 p.m. So I got a retracement and then I'm starting to come back down. I was actually I've put in, I believe, 4 orders, technically three because I one of them was only like 107 units, and that was just to make this a full 25,000. So I initially started with 50,000 out. I'm at 50,000 units short, and then I was like, hey, you know what? Let's just go ahead and trade a standard lot for the first time. So looking at this chart, you'll see that I am currently into a bearish continuation. However, I'm expecting this chart to really probably bounce off this level right here. We're probably going to retrace up into this area right here. Oops, sorry for that. We're probably going to retrace up to here, and we're probably going to continue on back down to the downside. So if you look at my chart, let me spread it out a little bit. You'll see I've marked my support and resistance levels. I marked resistance levels and resistance zones. So this is a resistance zone, support and resistance zone. This is really support and resistance level zone, and here's another zone. As you see, I have my stop loss right below this zone right here. I initially had my stop loss right here, but as price was entering that level, I didn't want to be stopped out. If I would have actually left my stop loss here, I would have been stopped out of my trade, which it was about negative $120. So I ideally should have been out this trade, but this is really a trade that I had a good feeling about. Like I said, this trade is technically over leveraged. I don't recommend anybody over leverage their trade when they're first trading forex. Um, Once you have your experience and you've probably been doing this for at least 5 years, then maybe you may want to over leverage your trades just to try it out if you don't mind losing $100 here and there. Ideally, you probably shouldn't, because like I said, $100 on this account would probably be what, um, it's about 5%. That'd be 5% of my account, so it's a little bit above the 3%. It's not a total huge loss, but you see, I moved my stop loss up. Um, but we didn't get stopped out, so you'll see I'm go ahead and move the stop loss down. You'll see I got the 24, I got the 25, and there's the 50. So I didn't make a stop loss for the 100 units because I mean that's gonna only be like a dollar up here, so I don't really mind losing a dollar. However, like I said, this is about $120. If price was to go back into this zone, yeah, I'm definitely gonna let it stop it out. Ideally, I would probably only let it. I want to see what my retracement would be on the 15 minute. Oh man. Ooh. All right, so you'll see a retracement would ideally be up here at this 618 level. I'm definitely not looking forward to it getting back to the 786 level. I would probably definitely exit my trade before it got to the 786 level. But like I said, I'll decide that later on. I'm probably be up for the next couple of hours. I just like watching TV and having my laptop sitting next to me. I don't stare at the screen all the time, but I do like to have my trade open just to where I can monitor it for trades like this, where I am trading above 3%. Like I said, it's about 5% I'm risking right now. But as you'll see, price is coming back into my entry level. You'll see my stop loss is right up there. Let me go to my daily. Matter of fact, before I go to my daily one, on my 4 hour, you see my 4 hour. Got a huge bull trap. Got a lot of bulls up there. Sorry, bulls. As you'll see, I marked my zone. This is the zone I'm really expecting price to kind of really probably retrace back upwards because this is a bearish retracement. It's a bullish overall trend, and you'll see I marked my fib levels right here. I marked my fib levels based off my daily, so I always mark my fib levels in yellow. So that's my 382, I believe, 5, and that's my 618. Because this is a retracement, I didn't mark my 786 because the 786 to me would almost signal a possible reversal. So, as I said, this is a retracement, so I'm not, well, actually, the one would probably signal a reversal in this case. I don't think the 786 would. Yeah. So you'll see. I actually did that wrong. Boom, 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 and there we go. Okay, I'm using the wrong tools. I'm tripping. I apologize, y'all. Oh, there we go. Okay, you'll see I got the 618, I got the 5, and I got the 3. Yeah, sorry, I was using the fib. I don't know what I was thinking. But like I said, you'll see I marked my take profit right above the 618 level. And that's just because I do expect buyers to come in these markets right around these levels. Ideally, if I just wanted to for sure buy, I would definitely mark my take profit right above this level. However, because we're in a retracement, I'm gonna just move my stop loss down. So, like I said, I generally don't hit take profits. I'll just move my stop loss down as the trade proceeds through these levels. So let's say I get a candle close below this level right here. Let's say, boom, we get a candle close right here. I'll make this red just so you all can get a good idea of what I'm talking about. Okay, so if we get a red candle right there, boom, make it a little darker. Boom, we got a huge bearish engulfing candle. We break through our 382 level, I believe it is. I'm gonna move my stop loss level right there. I don't want to put it right at the level because sometimes price action likes to retest these levels, so I just put it maybe like three to 5 pips above this level. Second candle. Let me make another one. Boom. This is where I really expect price to, kind of act up a little bit. I wouldn't be surprised to get a long wick here and probably have price close up into this level right here. And then, honestly, that's when I'm really getting concerned about this trade because it is a retracement. I'm like, hey, I want to take my profit, so I'm gonna definitely put my stop loss right here because ideally, this trade is probably, like I said, it's not gonna stay right there. It's gonna retrace back up in here, and we'll probably get an open right here, and we'll probably get an open. Hopefully, it'll hit my take profit. Yeah. So like I said, I do not expect it to hit this 618. However, if it does, that's cool. I will definitely already be out to trade it. I'll be happy with my what is it? I'm trading a standard lot on this one, so pretty much 56. So that'll be $560. So it'll be interesting to see how this trade proceeds. However, like I said, at this point, I'm just looking to take a decent profit. If I don't get to 500, that's cool. I'll take 100. Hell, I'll even take 50. Um, Before I get out of this, I want to discuss a trade that I talked about on my last video from what is it? Today's Wednesday, so I think it was Tuesday. New Zealand yen. Is this it? Yeah, I actually took this short. As you'll see, I was rejected out of this trade. Um, well, I wasn't rejected. I was stopped out. You'll see I was in on a bearish retracement, diagonal support and resistance, short 448 per pip, entry, stop loss, profit. Um, is that before or at my stop loss? That's actually under my stop loss, I believe. I can't really do the math because it's short. But you'll see I only lost $62. Like I said, it was only 14 pips. That was a very tight stop loss. And I think I did pretty good with this. As I really did have a tight stop loss, you'll see that it really didn't matter if it was to retrace back into that daily and pop back out because this was a huge candle. So I don't mind getting stopped out that trade because I mean, like I said, no, this was when I said 65 pips earlier, I meant for this trade. This was a 65 pip stop loss. But you'll see that we have a huge candle right here. So you see prices coming back down. I'm not sure what this is doing right now, so I'm gonna stay away from this trade. However, I do want to discuss USD Swiss. This is a trade I'm currently looking at. As you'll see, it's currently retracing. I'm expecting this candle. I don't want to trade this USD Swiss until maybe Sunday. This to me is not ready yet. Possibly Friday, but I don't like trading Fridays because there's no liquidity in the market. So I would ideally like to trade this on Sunday, October 27th. As you'll see, we got a Keynesian level right here. This is also our point 0.5 Fibonacci level. I have that marked in yellow. Also, we have diagonal support and resistance right there, or resistance rather. And so this is the level I'm actually expecting price to resist at. So I would ideally have a I'll go ahead and set up a price entry right here. Not price entry, but a price alert right here at the what is it? 0.9938348 level. I have a price alert right there just so I can know, hey, price is up in this area. Let's go to our 4 hours. Let's see what it looks like. Boom, we got a rejection. Blah blah blah. Then set a stop order. I don't really like setting limit orders. I like setting stop orders. I'll only do stop orders or market orders. I don't like limit orders. Orders are not good. As you'll see, that this market was trending to the upside. We got a lower high, so we made a lower low, so we're gonna make another low high right here. Boom, right there. I'm trying to tell you, this is exactly where the market's going. If you're watching my video, you might make some money on this one. Like I said, I wouldn't advise anybody to over leverage their trade unless you're highly experienced in forex and you don't mind losing more than 3% of your trade at a time. Like I said, that's not something many forex traders would do. Not any experienced forex traders anyway. A lot of people come into forex thinking that they're gonna become a millionaire overnight, just investing $100 or $1,000, and that's just not the case. This is another trade setup that I was looking at. Pound New Zealand. You'll see I got this Keynesian level marked off. This is also my Fibonacci 5.5 level. Looking at this, you'll see that quite often, more than not, the Keynesian is also my zero point 0.5 Fibonacci level. I'll discuss Keynesian and Fibonacci extensions and Fibonacci retracements in my later videos when I start doing Forex education. But right now, I just want to discuss trade setups. I want to let you guys know that I actually know what I'm doing when it comes to Forex. That's why I'm actually trying to predict the market for these trade setups. And so when these market orders actually do come out, I want to make an update to these videos. So, like I said, I'll be trading these currency pairs, maybe the week of October 27th to November 1st. But this is going to be a really bad trading week because there's a lot of news on Wednesday. Check your local Forex factory or whatever Forex calendar you use. You'll see there's a lot of Forex news on Wednesday. Also, we have FOMC on Friday. We got the Federal Reserve, non-farm payroll, all that crap. We got like I said, the FOMC Federal Reserve meeting, a whole bunch of I think Powell speaking. Their minutes are going to be released on Wednesday, so it's a lot of uncertainty in the market this week. So the sooner that we can get in these trades would be the better. But like I said, the calendar and the news can change anything that I'm currently about to say. Calendar and news can throw a whole trending market out of whack. So you'll see I've marked my possible entry points. I don't expect this market to come down to the 618 level. However, if it does, I would definitely be ready to enter the market on a stop order right above price. But like I said, I'm actually expecting the market to come right here because we have confluence. We have the Keynesian level. We also have that Fibonacci level. And like I said, it's only a retracement. You see we have an indecision candle right here. Let me take Ichimoku down. You'll see we have a spinning top right now. Ideally, if I don't want to trade this pair, but it would actually be possible to trade this pair as it is right now. But if I were to trade this pair, I have an entry level right there. I'd currently be in the trade, and I also have an exit right under this spinning top. So, but looking at my Williams percent R, it hadn't quite signaled to me that this trade was ready yet. But also it's not saying that it's not ready. Just based off this alone, I would feel comfortable getting in this trade. It looks like we're about to get a bullish TK cross. But looking at Williams percent R, you'll also see that we're right above the negative 20. And so this possibly could go long, but it also could come below this negative 20 and continue down to the downside. Like I said, honestly, there's no confirmation right here, so I'm going to just leave this trade alone. I'm going to wait till Sunday, see how this trade sets up. You see it's currently, it says 66 pips, but I don't think that's correct. There's no way to refresh my chart, but it just doesn't, it could be 66 because that's a pound trade. I'm not sure. But also, was this a trade I was looking at? I think this is another trade I was looking at. Aussie CAD. You'll see I have this trending support level mark. We're also coming off a 52-week low. Honestly, I don't really like this pair. However, if I was an investor, I would look at trading like maybe I would say 10,000 units. What 10,000 units is possibly, I'll say $200. $200, $1 per pip. That'd be what? Boom. A stop loss of about 184, depending on how much money you had in your account and how much you were willing to risk and how much you really want to come out of this trade. I'll say that I would probably put $100 right there, and boom, have 184 right there. Because honestly, I don't think this trade is gonna come all the way back here. But also, got to pay attention to the market, because you want to buy low, sell high. So we wouldn't get an entry right here. We wouldn't get an entry as low as possible on a buy order on this. And like I said, it's not currently ready for a long order. However, I would be looking somewhere up in here. So let me check my fib levels just to see where buyers may be entering the market. So just looking at this, I would expect the market or buyers to enter the market right up in here, because you got that trending support level right there, right in between these two fib levels. I definitely expect to bust through this 618 level, possibly reject this 0.786 level. I definitely don't expect it to come down to this Fibonacci 1 level. If it comes back to that Fibonacci 1 level, I would be looking at this trade going back down to the downside and possibly going through this 52-week low. But I think that's about it, traders. Let me make sure I didn't have anything else to talk about. New Zealand CAD. Was this another one? Okay, this was another one I was possibly looking at, but like this is another one I really don't like. We have a bearish TK cross right here. Ideally, I would have entered this trade on October 22nd, which was yesterday, Tuesday. However, I didn't like this pair, but as you'll see, so I would have lost my money because it came down. It would have triggered me. I'd have been right there and boom. But like I said, I didn't even like this trade to begin with because my Williams percent R wasn't showing any confirmation right there. But like I said, we do have confirmation technically now. Let me see. We really don't have confirmation now because we didn't really break through Williams percent R on the close of the day. Um, this candles has not closed yet, so just because it's down here doesn't mean it won't shoot right back up here. So, like I said, this is still not confirmation to me. I went ahead and marked my sell position and my stop loss position just to talk about in this video because we do have a bearish TK cross and we're at a 52-week low, I believe. Let me see. Yeah, so this would be an interesting pair to also look at, like for the investors, because we want to see, we have a bearish TK cross right here. We want to see what price does down here. Will we reject it, or are we going to go back up to the upside, or are we going to retest this level and possibly go keep going for new lows? That's a good question. So I'll be discussing this trade also next week. However, like I said, I personally wouldn't trade it. Even just looking at this weekly, you'll see that Williams percent R is telling us it's a buy order. So I don't know. We'll definitely see. I hope you all enjoy this video. I hope you all like the video. Subscribe, comment down below for any content that you all see. Comment anything down below that you think I can do better about my videos. Tell me if you like the video. Tell me if you hate it. Tell me how I can improve. Likewise, if you don't mind, please click that red notification bell to get instant access for brand new and exclusive content updated here on my YouTube channel. Ah, man, that's a mouthful, man. I hope you all enjoy, man. I'm out. Take it easy. Later.